Hello and what is going on, lovely people of the internet? It is Hootmoney here with another video for you guys today. Today we're going to be talking about Progenity stock. Once again, PROG, and today was a bit of a rough day. We broke through one of our technical support levels that we've been looking at for a little bit of time now. We were also down about 15% on the day, so it was not the prettiest day for Progenity. I've been trying to warn you guys of all these risks that are associated with holding this one, and I even mentioned in my last video, if you want Progenity stock at this point, if you keep holding on to it, don't expect a short squeeze. You're in it for the long-term fundamental value of Progenity. All right, so if that doesn't align with your thesis, if your thesis was originally I want a short squeeze, the chances of that happening are a lot less likely now, and that's just based off of the facts that were presented. Now, it did look a bit better in terms of the call option flow. We had 2 days of a bearish flow. Today was actually pretty bullish, so perhaps this is a short-term bottom. I don't want to make any bold assumptions or just tell you guys this thing's going to keep rocketing up if it does not. But on red days like today, on red days like we have seen, we're now getting it at somewhat of a cheaper price point as we saw before, and it's looking a bit more like a pump and dump if we're just looking at the chart. And speaking of the chart, let's just get right into it so you guys can see that right here around $3, this is where I made that tell your grandma video. You know, the video where I threw on my glasses. I was like, tell your grandma, tell your aunt that was cheating on her, buy some out of the money call options, blah blah blah, not financial advice. This is where I made it, right here, 11:15, yada yada yada, and right before 11:15 actually, and we spiked up like crazy, and now we're back to that level right here at $3.08. We're even down here in after hours, so it's not looking great. It's not looking great, and as you guys can see, we had this expanding megaphone pattern, and we finally broke out of it, and it's probably most likely due to the fact that the short squeeze is not on the table. I understand Progenity is a great company, and they have lots and lots and lots of fundamental value right here. But at the end of the day, when all this volume comes into a stock because people are anticipating a short squeeze, if you're just changing the narrative to this is a fundamental play now, this is a fundamental play, this is never about the short squeeze, blah blah blah, obviously people are going to sell the stock. So that's the main reason why I was very hesitant over this past week or so, and we are selling off here. It does look like we might get that golden cross. If we do bounce from this like $3 level that we're seeing on Progenity, it may get that golden cross. The golden cross is a technical pattern where the 200-day moving average, which is this orange line right here, and the 50-day moving average cross, and that's called the golden cross, which is a very, very bullish sign for a security. So that may happen. That is a hope, but we did break trend, and it did end up selling off because of it. Looking at the market cipher, market sniper, we did get that green means go dot right here, but it was treated with a red dot right at 8 a.m. before market even opened today, saying to abandon the trade. Overall, just looking at this one-day chart, we'll move to the one-day chart. You guys can see this chart is looking good. It's still green money flow. So in terms of the overall longer-term trend, obviously it's still pretty good. I mean, we started this thing at about $1. We're still at $3, which is about a 200% increase from that point on. But at the end of the day, there's still room to come down here. And when you're really looking at this, there's a chance that momentum could actually dry out and we could get a blue wave to the downside. And I've mentioned this before, the blue waves are momentum waves, right? So we have only pretty much had bullish momentum waves since this thing has started, and it's yet to see a bearish momentum wave. So that is definitely a possibility. Going back to the 4-hour chart, we've been in this bearish money flow for a while now, which makes it extremely difficult to continue to rally when the money flow is bearish. If there's money moving out of a stock, it's harder for it to go up. It's plain and simple. And that's what Market Cipher is showing here. If you guys wanted to check out Market Cipher, by the way, there is a link below in the description. I'll be having a discount code for that very, very shortly as well. This is a day trade and swing trading software, so just because it gives the green dot right here doesn't mean that it's necessarily going to jump, because it'll just as easily say stop out on your trade, especially with something that has bearish money flow like that. the signal is not as strong. On the hourly chart, it's also very, very bearish money flow. At some point, this bearish money flow is likely to stop. As you guys can see, there actually was a short signal right here at market open. When you do have a bearish money flow, or this red money flow that you're seeing right here, the short symbols are much more accurate than the buy signals, right? We got a short signal at market open, and then Progenity continued to sell off throughout the day, but then the buy signal right here under the bearish money flow that we got right here did not really go up too much. So that's why this whole bearish money flow is so important, because if there's money flowing out of a stock, obviously it's much harder for it to go up. If you guys wanted up to $3,500 in free stock just for signing up and depositing at least $1, you guys can check out Moomoo using the links below in the description or pinned comment section. It's also a way of supporting the channel. A bunch of people complained Webull does payment for order flow, blah blah blah. Moomoo doesn't do that. They also have the best promotion for stocks right now. So if you don't like free money, I guess don't check it out, but I like free money. I assume you like free money, so check it out using the links below, the description, pinned comment section. Getting into the short interest analysis, you guys can see Progenity is still obviously on the threshold security list alongside BBIG and AGC right there. If we go into the Ortex data, you guys can see cost to borrow is coming down again. Obviously there's still more shares being returned. This is likely some short covering now that the price is coming down, and the shares are less likely to be borrowed, so less people are actually shorting the stock. It's still kind of expensive to borrow. The utilization still says it's at near 100%. It's hard to imagine we're still at 100% utilization. That figure just does not make any sense to me whatsoever right now. But yeah, no, it is not looking as great. I mean, we were at over double the amount of short interest at one point. You guys can see right here, as reported as of October 15th, it was about 23 million shares that were currently being shorted. In October 15th, I mean, that was half the price. So a lot of shorts did lose money on Progenity, and they did in fact cover at a higher price, which technically would be a short squeeze. There's just so much volume on this stock that it did not make the exact price move that people were anticipating, which is another reason why these short squeezes are insanely difficult to time, because you don't know when it is the top, and that's why it's so important to take profits along the way. That's why when we did hit $6 per share, I was coming out and I was saying you're allowed to take profits. If you're up on your money, you're allowed to take profits. Now, I was hoping for more, but hope isn't going to just get you anywhere in this market. You have to be diligent about the way that you trade, the way that you invest, and make sure that you pay yourself, right? Because at the end of the day, the chart can look like this, where it goes all the way up, but then sells all the way back down. And you guys can see we're close to that 100% Fibonacci level right there, which is an absolutely extreme sell-off in Progenity. Looking at the Fintel short squeeze leaderboard that we have right here, you scroll down, Progenity is all the way at number 63 on this list. Still a threshold security, but again, 63 on this list, and it's for a good reason. It's going to be a lot harder to get a short squeeze if there is only 10 million shares, and this thing trades well over 10 million shares each and every single day. And the fact that we got all of these return shares, again, I have to keep bringing this up because it's true. We got so many return shares, so many shorts covered. The average cost for short sellers at this point is probably in this region, anywhere from like $5.20 to about $4.10. That's where I imagine a lot of this short interest is, because of the trade of hands that we saw here, right? We saw all of these return shares, and then there was new shares put on loan when this thing was trading at elevated price levels. So obviously shorts have a lot more leverage than they did before we ran up right here on 11.12. So it's just really important that you guys understand what this short interest data means, because there's an entire reason why this thing is moving down on the short squeeze leaderboard list. I understand Fintel and Ortex aren't necessarily known for having the best data. A lot of manipulated data comes to them. They're just the processor of this data. They take what they receive and they show it to us. Whoever is feeding them the data, that's who's really at fault here. The people, the hedge funds that are borrowing shares, making it look like it's a shorted share, according to Ortex's algorithm. This short interest change right here is completely depicted by the borrowed share figure, right? So you could easily borrow shares and not short them. And I believe that's what happened before the short squeeze. But you can see right here that from October 29th to November 15th, it was about 5 million less shares being shorted. And you can see that the short interest didn't go down by that much. I mean, right here on November 15th, it said 18% from Ortex's estimate, right? And then right here on October 29th, it was about 19.63. And then the next day, on November 1st, it was also 18.8%. So it went down by like 1%, but right here it went down by 4%, which just shows that is literal proof, because the actual FINRA reported data differed than the Ortex estimated short interest percentage, which is literal proof that the data was manipulated right here. So you can't rely on Ortex, because whoever's feeding the data might be just taking out borrowed shares, making it look like there is added short interest, when in reality they're covering the stock. So this data can be manipulated, which is another reason why FINRA really needs to be updating this data that we see here every day, instead of every 2 weeks with a 2-week delay. It's so difficult for retail to really know what's going on with short interest in the end if we don't actually get live data. Ortex can be manipulated, Fintel can be manipulated. At the end of the day, it's so difficult. Anyways, looking at Fintel after that whole rant about how terrible they are, there's still tons of shares available to be shorted. The borrow rate is coming down here, which makes me believe the utilization is not 100% that Ortex is reporting there. And the combined short volume ratio is still very high. We also got those failure to delivers, which is probably the last hope of actually getting some positive price action here, at least in terms of the short squeeze. We do have that investor presentation right here. I'm not sure if I talked about it already in this video, but that is tomorrow, so look out for that. We'll be getting that tomorrow. The Piper Sandler one-on-one meeting with investors. We may get some partnership news. It's not set in stone yet. The options flow right here was actually pretty bullish right here. Now the data is a bit skewed right here because there's this cross trade, which is essentially a trade made for liquidity purposes. So you guys can see the premium on this was about 204,000 compared to the premium on some of these other ones. But towards around lunchtime, there actually was a bunch of buying of these deep in the money call options as well. Right here you can see one $1 expiring in April of 22, and then right here a $0.5 strike price expiring in 2024. So these are deep in the money, and there were 44k premium right here and 41k premium, which far exceeded some of these other premiums right here. There's also a bunch of put options here fired around 10 to 11 a.m. Looking at the charts right here, again, it is skewed by that one 7.5 call option you guys can see right here. But at the end of the day, it is overall bullish, about 83% bullish for Progenity, which is very good. And bulls are targeting this $4 right here, as well as these low strikes. I'm not going to count that 7.5. And then bears are going for higher strike prices right here, the 6.5, the 5, and even the 3.5. This one's a bit more risky, it looks like. And they're going for short-dated expirations such as 12.10 and 12.17. Looking at the historical options flow, the options volume did come up again today. As you guys can see right here, it was about 73,000, which is a bit higher than we saw yesterday, or Friday, my bad, at 25,000. So that is definitely to be expected. We did get a half day on Friday, and it was a holiday, so there was less volume in the market in general. So I somewhat expected that, but it was still pretty low overall. We'll see what happens with that. The biggest options trades of the day were 70% bearish. The biggest one was obviously that cross trade right here, $204,000 in premium. Some selling of call options right here, as well as buying of these deep in the monies, and the rest of them were selling call options or buying put options. The most active chains today in terms of volume right here was the $5.50 call option expiring 12/17, $4 call option expiring 12/03, so this Friday, and then the $7.50 also expiring 12/17. There also was a slight increase in dark pool volume today compared to what we saw on Friday, which was non-existent, and then Wednesday, which was also very low. So the increased dark pool volume as well as the increased call option volume could be a sign of a short-term reversal. It's hard to say for sure. We did break that technical trend that we were following for a while, and we did sell off greatly. It's hard to say. I don't want to give you guys false hope when it isn't there. But yeah, guys, it is hard to say. I don't want to make a prediction and be wrong about it, so you can take all of this data from this video and make your own decisions. Watch it back if you guys need to. Watch it again. See if there's anything that you missed, any important information. And yeah, guys, that's about it for the video. I hope you guys have enjoyed. As always, I enjoyed making it. I don't enjoy the fact that Progenity stock is coming down, but it's just a fact of life. When you're dealing with these high volatile stocks, such as Progenity, that have high short interest, there's people with big money that want this thing to start plummeting. You have to be aware of the risks. And I understand people don't want me to talk about the risks, but I am almost sure that perhaps I saved someone some money, right? Someone might have sold, someone might have cut losses on their position because I mentioned these risks. So I will continue to talk about these risks, especially if they are prevalent and they are meaningful. If the risks are tiny and they're small, then I'll just make fun of them, right? I'll make fun of the stupid bear talking about it, right? But if they are a meaningful risk, such as a stock that rallied because it was a high short interest short squeeze candidate, no longer having high short interest, then yes, I'm going to talk about the risks, right? And I'm going to tell you guys why I think it might be risky. So I hope you guys can appreciate that. If you guys do, drop that like on the video, subscribe for more content, hit that post notification bell down below. We still go live Monday through Friday, 30 minutes before open, doing jumping jacks each and every single day, looking for the plays, making crypto and stock plays. We had a few good option plays. We had a Roblox and a TLT option call out that did very, very well. I did not enter into those trades, but they did do very, very well. So definitely join me for the morning live streams and drop that like and check out Moomoo if you guys haven't already. Free money if you check out Moomoo. Just make an account, deposit $1, get up to $3,500 in free stock. Anyways, I'll be seeing you guys next time. Have a wonderful day. Peace.